Carl, what are you waiting for? I think we should go live, bro.
Yeah, they're waiting for you.
Let's go. Alrighty, we are one more sleep until the big FOMC meeting tomorrow. One more sleep. That's what I feel like it's that sense of anticipation, because it's like the world ends after the FOMC meeting tomorrow. That's what the market's basically telling you. Everything is about the FOMC meeting tomorrow. Today we're going to look at the FOMC meeting, but we're also going to look past the FOMC meeting, right? Because believe it or not, the world doesn't end after the FOMC meeting tomorrow, because then after it, there's another day. And so we're going to look at what we can expect from the FOMC meeting tomorrow, what we can expect from the guidance afterwards. Then we're going to look at the Bitcoin price. And I mean, what you got to look at here is you got to say to yourself, hold on a second. Bitcoin is not doing great, but when you take it in context of what's happening on the markets, you've got to take your hat off to how well Bitcoin's doing. Because if you compare it to, say, for example, the NASDAQ yesterday had this little capitulation candle and recovered, and Bitcoin didn't go below 38,000. So that's a big thing. So yeah, today we've got a big show talking about the Bitcoin price, talking about a whole lot of altcoins. I've got a big guest with me today. We've got some giveaways at the end. Yeah, let's do this. It's going to be huge. It's going to be fun in this most boring market that we've ever seen in crypto. We are going to have some fun. Let's do it. See, I wore my business shirt today. I wore a collared shirt today. I'm trying to get this credibility thing up. So now I'm going to start wearing collared shirts to see if I can, if that will make me feel more credible. I don't know if it will. Welcome back, guys. We are one day away from the FOMC meeting. Apparently, after the FOMC meeting, the world ends, because no one's talking about what happens after the FOMC meeting. It's all about tomorrow. And remember, tomorrow, we're going to be doing a live streaming at 1:30 EST or 2:30 EST. What time is the live streaming?
Tomorrow.
Yeah.
I think it's 2:30.
I think it's 2:30. Or whatever the time is, we're going to be doing a live stream when Powell does the guidance after the FOMC meeting to walk you through what we think. So make sure that you have your popcorn ready and come and spend some time with us tomorrow. What else? If you're new to the channel, subscribe to our channel. If you're here, you're a fucking legend, because you're here in good times and in bad times, and that's pretty much how we are in the markets. We are through the good times, we are through the bad times, and we know that actually billionaires are made in the bear market. So we're here and we're adjusting our portfolios in this bear market. You know what else is made in the bear market? Salty people are made in the bear market. I saw that Zach XBT took on Scott Melker again. Poor guy. He took him on about stuff that was discussed a year ago. Poor Scott Melker hasn't discussed one altcoin or small cap altcoin on his channel for a year, and yet Zach XBT brings up stuff from the past. I don't see the point. I'm all for ethical behavior and policing the space, but I mean, what's the point? Honestly, what's the point? Anyway, let's get into the crypto markets. Let's talk about Bitcoin, because I think there is a wait, where is my cursor? First of all, I need a cursor. Okay, so now I have a cursor. So let's look at the NASDAQ. The NASDAQ printed the lower low, and yesterday it had this wick down. So if you look at from the top to bottom yesterday, from 13,082 all the way down to 12,700. So there was about a 2.5% top to bottom in the NASDAQ yesterday. And despite this, what we had Bitcoin staying around or above 38,200. And to me, that feels like, if Bitcoin isn't responding to the NASDAQ, it does feel like we've hit a local bottom. And when I say a local bottom, we may have hit the bottom for now, Doesn't mean we can't go lower, but for now it feels to me like no matter what the stock markets do, the Bitcoin price has kind of found a support level where people just keep buying. I know Kyle doesn't believe it. If you watch Kyle's stream earlier and you still haven't gone to slit your wrists, well, congratulations to you. Kyle, do you know how many people texted me after your stream earlier and said, this is depressing? What did you do? What did you speak about?
No, I just said what the next level was.
What was the next level?
37, then 34. What's so bad about that?
I'll tell you what I think. I think that tomorrow we're getting a positive surprise. And let me walk you through what I think is going to happen tomorrow and why I think we probably have hit a local bottom. I may be completely wrong. And then tomorrow what you guys will do is you'll cut out segments from the show and you'll post them all around crypto Twitter and you'll say, look what you said. But I have the conviction and the guts to take a view, and I'll tell you what my view is, so that that you guys understand. I want to show you my thinking, and then you can decide afterwards whether you want to think like me or whether you don't want to think like me. So my thinking starts off here at the beginning of April, here, and goes all the way down to say in the last month the NASDAQ has corrected about 15%. It bottomed out at about -20. Okay, so -20%. Now remember that the Fed has a mandate not to crash the markets. I don't think that Jerome Powell wants to crash markets. I think that Jerome Powell wants to have a soft landing. I think he thinks the markets were overheated and he has a mandate to control inflation. But crashing the markets is not going to control inflation. A soft landing, something that goes down and then slightly up and then down and then slightly up, is a much better result for the Fed, because the last thing that the Fed can afford to do in an environment where Russia has invaded Ukraine, where there's supply shortages from China, where prices are increasing, not because of the amount of money in circulation, but because of everything else that's happening in the world. The last thing that the Fed wants to do now is crash markets. And so, whereas everybody knows what Jerome Powell is going to be doing tomorrow, he's going to be raising interest rates by 0.5, so 50 basis points. The more important thing is the guidance that he gives afterwards. And he's got two options in the guidance. He can either be hawkish, negative, or he can be bullish, he can be dovish. Now, in previous meetings, he's come out and he's been rather hawkish. And so he's kind of crashed the markets a little bit every time that he's spoken. But I think this time could be different. And the reason why I think that this time could be different is because he's doing this on the background of a recession in the States. He's halfway to a recession. He's got 1 quarter of negative GDP growth, and he's got another one coming up now, and it will be negative. And he's got markets which are down 14% just in 1 month. I don't think that Jerome Powell comes out tomorrow and says, okay, we're going to be more aggressive. I think he'll reiterate the fact that they're going to be tightening, at $95 billion a month if the market allows. And I think it increases by 0.5. And I think he then leaves it pretty open and says, we will adjust to the market conditions as we see fit. So that's what I think happens tomorrow. I don't think that he wants to crash the markets. I don't think that the mandate for the Fed now is to crash the markets. And I think what the markets have priced in now, because everyone's so scared, I think the markets have priced in the worst case scenario. And I think, therefore, that we can only get a positive surprise tomorrow, and that'll give us a little bit of a relief rally. That's what I think will happen tomorrow. You might think I'm crazy. Why would I come on here and actually give you guys a view where I can just stay neutral, and say, because that's what I think. And so you kind of, if you believe what I believe, you may want to just prepare your portfolios for a little bounce. Maybe I'm wrong. And how you would do that is you would take positions that you are comfortable to hold long-term if the bounce doesn't materialize. But if the bounce does materialize, at least you haven't missed the run. So that is how I see what will happen tomorrow. In a few minutes, we're going to get Alex Krüger. He's a macro economist, and he's going to be helping us with what he thinks is going to happen. I'm dying to hear what his view is. Regardless of what happens tomorrow, though, we've got to remember that tomorrow is not the end of the world. Tomorrow is just a Fed meeting, an FOMC meeting. They happen pretty much every month. Not every month, but almost every month. The bigger thing is what is going to happen after that, and what's going to happen in the next couple of months. Now, in general, I have been pretty bullish, and I'll show you in a second why I've been pretty bullish. But today, going viral is Paul Tudor Jones's interview on CNBC. Now, This is depressing. So I warn you, if you are on medication, you may want to just double drop one now. Okay. But I mean, this guy's smart. Okay. He's got to be smart. So I just did a little Google search. He is worth $7.3 billion. He made his money in hedge funds. He's from Memphis. He's a guy from Memphis. He's pretty smart. He's pretty switched on. Listen to what he says about the future. Remember, just for sensitive viewers, you may want to switch off now. For those of you who are on meds, you may want to just take 2 instead of 1. And for those of you who haven't started meds, after this may be a good time. So,
do you look at that, Paul, and say to yourself that a recession is coming? Do you say everything's on sale, I got to buy things? Do you say that I got to short this market? I mean, what? I know you say you don't have a strident view, but you must be telling
look,
your traders
clearly
to do
you
something.
don't want to own bonds and stocks. You start with that. It's going to be a very, very negative situation for either one of those asset classes, right? You can't think of a worse macro environment than where we are right now for financial assets. And again, one of the reasons, I think maybe the biggest differentiator between now and those other periods over the past 40 years is look at the level of overvaluation that we were both in rates as well as stocks. So that's one reason why even with this tightening in financial conditions, the Fed still probably has to raise rates to get inflation under control. Heck, we had CPI greater than 8%. Maybe it comes down to 4% this year. Maybe it comes down to 3% if they stay the course and stay tight in 2023. If you've got inflation greater than 3% on average, your purchasing power declines, cuts in half in 13 years. It's why I wish we could go back to those halcyon days of sub 2% inflation when you didn't have to worry about the value of your money. You didn't have to worry about what you were doing with regard to pay raises, and you didn't have to worry about a whole pricing and a variety of things that all of a sudden become that much more important in trying to, again, just have a normal business that you have to think about when inflation's 3% and higher, and you don't have to think about when inflation's 2% and under. I think the biggest lesson that we've all learned, certainly central banks have learned with the experimentation they did in 2019, 2020 with average inflation targeting, is that be careful what you ask for. Sub 2% inflation is a much better problem to have than inflation above 2%. It's very difficult to calibrate once it escapes like it has now. That's the scary part for Jay Powell, is the genie's out of the bottle. And we've seen in history when the genie's gotten out of the bottle, it's really, really hard to put it back in.
Put it back.
So no, I wouldn't want to be in his seat right now.
Okay, so he's saying that he's expecting a rough time for bonds and stocks for the next 6 months. That's pretty much what he's saying, and that you don't want to be in bonds and stocks. Now, the problem is that if you don't want to be in bonds and stocks, and crypto is correlated to bonds and stocks like it has been correlated to stocks, then it's probably not a good time to be in crypto. But then he followed it up speaking specifically about crypto, which made me a little bit more bullish than when I heard that first part.
Well, actually, here's what I was going to start out by saying. If you ignore Paul Tudor Jones, ignore him at your own peril. And you may not always be right, but you were Druckenmiller. I mean, there's not many guys like you. So, I mean, I really want to hear your answer on this, because I'm bullish on Bitcoin. I don't see how I can be.
Yeah. So, first of all, thanks for the question. It's a great question. Here's what I see.
Remember when Americans say, thanks for the question, great question, they're actually thinking of what they're going to answer in their minds. It's a stall tactic, just so you know that.
This generational divide, and it's a digital divide. And unfortunately, Joe, you and I are probably on the other side of it, though I think we're both scrambling as fast as we can to understand it. If you look, and I see it all the time in our quant groups, I see it all the time
This is important.
in my kids' friends. If you look at the smartest and brightest minds that are coming out of colleges today, so many of them are going into crypto. So many of them are going into the Internet 3.0. It's hard not to want to be long crypto because of the intellectual capital, just the sheer amount of intellectual capital that's going into that space. And clearly, if you think about the ultimate dream of crypto, it's a borderless internet, right? Where all of a sudden you have blockchain as the verification code to allow anyone on the internet to instantly connect because the blockchain verifies who they are. And then that opens up just huge possibilities. Clearly, central banks and central governments.
So you can see he's excited. He's super excited about being in blockchain.
Particularly when it comes to using crypto as a medium of exchange. That's the number one thing that's holding it back, is the fact that you're not going to get buy-ins from governments because they lose the ability to control the creation and the supply of money. Having said that, in a world where we're starting to deglobalize and breaking down and actually probably going reverse, that ability to have the borderless internet, that ability to have a store of value outside of necessarily having your money denominated, whether it's in rubles or yuan or dollars, it becomes very attractive. So I've got my modest allocation to crypto.
Okay, listen to this. So he says, I got my modest allocation to crypto. This is where it gets super juicy.
On top of that, that goes from fully invested to zero. And I'd say right now I'm modestly invested.
So he has a trading portfolio which goes from fully invested to zero. And right now what he's saying is he's modestly invested, which means he's deploying a lot of money into crypto now.
That it's going to have a bright future as we roll through these rate hikes at some point in time. A lot of it depends on what our central bank does. A lot of it depends on how serious we are about fighting inflation. I kind of think that when we get down to it, and that might be September, could be November. I mean, we could easily be at 2.5% rates in September, right? That's just 50 a meeting for 4 meetings. It'll be a different world. You'll now have, now the cost of owning crypto, gold, and other inflation hedges will be more significant.
So long story short, what he's saying is he is expecting turbulence in the bonds and stock markets for the next 6 months. He says the environment is not good for bonds and stocks for the next 6 months. He thinks that the Fed is going to be pretty serious in tightening. But the one place where he is investing in crypto. And he says right now he's modestly invested in crypto. He's not at zero and he's above zero. He's modestly invested in crypto. He would hate to be Powell, but I think the sentiment that he shares is the same sentiment that the whole of Wall Street is now grabbing onto. And I think it may be the savior of crypto. So whereas bonds and stocks may go through a rough time, you got to think to yourself, where is the best place to be in this rough time? You can ride out bonds and stocks, or you can be in crypto. And the sentiment that we're getting out of Wall Street right now, I read this, it says at a milk and dinner, crazy as it sounds, many institutions are more interested in talking about Ethereum and Bitcoin. So the talk here is that, we may be going into this recession and stocks and bonds may be going through a tough time. But the reality is that where we would rather be is crypto, because it's almost like being in tech in the year 2000. It had collapsed and all the markets had collapsed, but you'd rather be there than be in traditional stocks. And that's really where it is now. And so if we look at the fundamentals, you can't argue the fundamentals. One is addresses with more than one Bitcoin at an all-time high, which means there's much more adoption. Bitcoin that hasn't moved for the last 12 months, also an all-time high. Mining hash rate is an all-time high, which means that there's more miners securing the network than ever. And now, nation-state adoption, recognition, and regulation is also at an all-time high. Don't take your eyes off the sight of this. And what you got to remember is that I said this to you guys a while back. I said, I think we have about just less than 2 years. We have 500 days, maybe a bit less now, maybe 490 days before Bitcoin and crypto actually becomes institutionalized. And when Bitcoin and crypto becomes institutionalized, we lose our competitive advantage. Right now, we have a competitive advantage that we have more information, quicker, more knowledge, and can get into more investments than the institutions. But in 500 days, when there's regulation in place and the institutions are coming in here, the industry matures. And you can see already, I read the Banter newsletter, and you can see already, you can see if you look at the type of deals that they are investing in, if you look at the type of deals they are investing in, and you look at like early stage versus say Series A and then Series B and Series C. Now, early seed is the earliest here, then Series A, then Series B, then Series C. You can see that over the years, right now, the lowest amount of seed investments, and what they're doing now is they're actually developing their investments. They're starting to follow on. So they've got more Series A's, they've got more Series B's, more Series D's, and more Series E's than we've ever had. What this points to is this points to the fact that the market is maturing. And if the market is maturing, it means that our runway to get our runway with a competitive advantage is getting smaller and smaller and smaller. So again, I say, even though it's quite tough to stay motivated in this market to position your portfolio and stuff like that, this is the time to be doing it, because I think we're going to have one more run, maybe two, but definitely one more run where we have an advantage on the institutions. After that, it's fair game. And in fair game, unfortunately, the big money is going to win, the big research is going to win, the big tools are going to win. We can already see that since the institutional money has started to flow into crypto, we're starting to track the NASDAQ. We didn't used to track the NASDAQ before. The reason why we didn't used to track the NASDAQ before is because the institutions didn't bring their money here. Now that we've got institutional money here, institutions see it very simply: risk on, risk off. Right now they're on risk off mode. So take your money out of high risk asset, take your money out of the NASDAQ, take your money out of Bitcoin. And that's why we're getting this uncanny correlation between Bitcoin and the NASDAQ. We didn't get that. We didn't have that a while ago. And the reason why we didn't have it a while ago is because we had a different caliber of investors. And so that's why I say, I think right now you've got to be using this time to position your portfolio. I think tomorrow we've got the FOMC meeting. The FOMC meeting is probably not as important as what happens after the FOMC meeting. I did want to show you guys this. So this is a chart of what happens after every FOMC meeting. And I mean, if you look at the data here, if you look at the FOMC meetings, after every FOMC meetings, it seems the market kind of goes up, or recently the market has been going up. What that could say is that the market is now pricing in the worst. So the market is pricing in a very aggressive Powell. They're pricing in a 0.5, 50 basis point rate. Like, I think that's pretty much a done deal. And they're pricing in quite an aggressive Powell. But if he comes out after the FOMC meeting tomorrow, and he goes anything less than full hawkish, then I think we could get a relief rally, a little recovery, a bounce. That's what I think. Let's find out what Alex Krüger thinks, because I'm fascinated by his views. Alex, welcome, buddy.
Hi, Ron. How are you?
Good. How you doing, man?
Good. Good morning.
Morning. What do you think of my thesis that the market is pricing in the worst case scenario for tomorrow? They're pricing in a 50 basis point rate hike, and then they're pricing in quite an aggressive Powell after the rate hike. And that anything less than that will actually give us a little bit of a relief rally.
I agree on that, but I actually don't think that the market has priced worst case scenario at all. Actually, I mean, okay. Right now what the market has priced in is pretty bad. It's basically 300 basis points by year end, so that's about 50 basis points a meeting. That's really aggressive. I mean, if you think about it, a year ago, we literally had 0% pricing by year end. So it's really bad, but it could be worse. I mean, we could be talking about 75 basis points. We could be talking about basically the Fed, instead of doing a QT the way they're talking about it, which is basically letting their balance sheet run off, which means not reinvesting the proceeds, the cash flows. They could start actually actively selling. Yeah, it could be worse. I don't think it's going to be worse. I think odds favor exactly what you were talking about, which is a relief rally like we've had in the last few meetings. It's been quite uncanny.
So what do you think? Let's play out tomorrow. So I think, can we agree that there's definitely a 50 basis point rate hike tomorrow?
It's 100% banked in. Yeah.
100% banked in. Amazing.
100%.
Okay, Powell comes out.
97.5% baked in, yeah.
Okay, then after the rate hike, Powell comes out tomorrow. What do you think he's going to be? What do you think are going to be the key points in his post meeting press interview? What do you think we should be listening in for? What do you think we're going to hear there?
Well, first of all, I think that more important than listening to what he's saying is seeing how the market is reacting, because at the end it's just us. We're one mind trying to understand what Powell is saying, and oftentimes we get it wrong. The market doesn't get it wrong. So basically, the way I approach FOMCs is basically what you have sometimes at some point around midway in the press conference. That's the way the market is going to go. So like you can take your interpretation of it, and if it doesn't match what the market is saying, you're wrong and adjust. That being said, I think the key points are going to be, first of all, he's going to be asked about 75 basis points, and he's going to say quite likely, not thinking about it, but it's not off the table. That's something
That's exactly
minor.
what he says. Yeah, that's exactly what he says.
Yeah, and not off the table. I mean, he has to say that.
Yes.
And then I think that the key, the emphasis is on basically QT, on quantitative tightening. Basically, the keys there are, one is going to be, are they going to be running, when may they start actually actively selling instead of letting it run off? And the other thing is how big they're going to start.
What about this 95 billion per month, which is what the number that they put on the table last time?
Well, that would be a disaster. I mean, basically, the market is thinking that he's going to go somewhere between 20 to 60 to start with, and phase it in the next 3 to 4 months. What could go wrong? That could start right away. It could start like 90, could start at 60. If they started off at like 20, I think we're going to see a very, very large rally.
Okay. Is there a scenario where the Fed increases interest rates aggressively and the market continues to go up?
Continues to go down.
Up. So I'm saying, is there a scenario that says, okay, we are where we are today. The Fed increases interest rates quite aggressively. We get between 3 and 3.5% by the end of the year. And at the same time, the stock market continues to go up. Is that a scenario?
Yeah.
Or
absolutely?
So
absolutely,
the reason why I asked that,
it's priced in, right? I mean, it's not a joke.
The reason why I asked that is because if I look at historically, the yellow line here is the Fed rate increase cycle, and the blue line here is Bitcoin. And we can kind of see that usually in the beginning of these rate hike cycle, the last time we had a rate hike cycle, Bitcoin continued to go up quite aggressively. But I guess we are dealing with a different Bitcoin in a different market, right?
Yeah, I don't think that's relevant at all, actually, because what happens is Bitcoin back then was an adoption story, was highly liquid, was mostly about adoption. So at the time, basically, Bitcoin was not correlated at all with stocks. I mean, you were just talking about the NASDAQ, which is really like, it's stunning with intraday correlations at like 90%. That was not the case before. I mean, correlation was literally hovered around 0 consistently through the years. So if one assumes that basically Bitcoin is not correlated to stocks, which was the case, then therefore the correlation with the balance sheet and interest rates was quite likely mostly coincidental, not entirely. So I don't think that matters.
And the reason why Bitcoin is so correlated now to the NASDAQ is because there's so much more institutional money in Bitcoin, and because they are the risk on or risk off.
Yeah, 100%. Data market makers, basically, who are literally people that turn on their algos. It's like so for that correlation to break, everybody's talking about decoupling, right? When is it going to happen? Yeah. For decoupling to take place, we need flows. We need some major flows to come in and basically overpower the guys running the books right now. So I'm hoping that's going to happen actually by year end. So this is like best case scenario is the Fed going pivoting a little bit to the dovish side. Just a little would be enough. And why would that happen? Well, the thing is that the economy is already going down south pretty hard. We really had a very negative print.
That's the question I wanted to ask you. Like how, like, we've got negative print. We're pretty much heading into recession in the United States. Do you think that Powell's thinking about that in the back of his mind, or do you think that right now he's saying, look, I don't care about recession, I care about reducing inflation?
I think he cares about both, but inflation comes first, because if they don't control it, I mean, we're pretty much, I would use some English French word there, but it would be pretty bad. I mean, the Fed is done also. I mean, the Fed's job and the central bank's job is to literally control inflation and keep inflation expectations anchored, meaning stable. If they fail at that, everything else goes down the drain. I mean, they're toast, we're toast. So that comes first, and he's been actually talking about it, basically about repeating what Volcker did in the 80s. He's done it explicitly a few times.
How do you see the rest of the year playing out? If I were to ask you to look forward, how do you see the rest of this year playing out?
I think if I have to take out my crystal ball, I think we're going to go up tomorrow. I'm thinking of basically the Fed delivering on everything they talked about, going light on the QT side to start with, and front-end rates are so baked into the price that I can see, and I think based on that I'm positioning that I see like a week to 2 week strong rally on risk assets. That on one hand. Then secondly, I think that we're going to go into a summer slumber, quite likely with a downside trend after a very big rally.
Sell in May and go away?
Selling late May and go away, and then come back in August, like come back before the boomers come back into the market, like try to front run them if things are starting to look better. And the key aspect there at the end of the year, I think, is the Ethereum merge. I think it's going to be a game changer. I'm not an ETH maxi at all, but right now ETH is it's my main position. It's the only thing that I'm actually holding in this madness that we're going through.
Really? So you're not even holding Bitcoin? You're not even holding Bitcoin?
No, I'm not holding Bitcoin. I have very little Bitcoin. Basically, I use it as collateral for options trading and a few other things, but it's mostly ETH. Used to be Bitcoin, by the way. Now it's ETH.
What about the smaller coins? I mean, I know you've tweeted about Fantom. You tweeted about the Fantom capitulation. You said this is what capitulation looks like earlier this week. What about other smaller coins? Are you a buyer of other?
I try not to shield actually, but I'm I'm very large for something that is as liquid as Fantom. I'm very large Fantom right now since the weekend.
Me too.
I'm looking for basically this thing to go up and break the one line. I think it offered, and I think it still offers a very nice risk reward.
Yeah, I think
something
so
else
too,
I noticed. Sorry, go ahead.
I think the reason for the capitulation is a liquidation, is a mass liquidation. That's not a fundamental area.
And hysteria, right? I mean, people start talking about it. Think about it. That guy could have just basically turned around. He hedges his position on futures and basically just lets it liquidate, let people go crazy about how there is not enough spot on chain. It was like kind of like insane. Something I wanted to say is something very bad happened on, at least from a public perspective, on Solana. I think it was pretty bad, but I'm not here to judge. But I think we're seeing it basically is Sol underperforming, and I think and near outperforming since then. And I think maybe just random, maybe just noise, and me like seeing something that is just short-term noise. But I think there is a pattern there, and near and Fantom would outperform if the Fed is nice to us, basically.
Yeah, I guess small altcoins or smaller altcoins can't outperform if the Fed is coming in aggressive, unless they've got really big adoption, right? Yeah. One other thing, I mean, you were quite vocal against things like the land sale, the Yuga land sale, and the sustainability of things like Steppen. How do you feel? I mean, is that all driven by hype? Is that hype unsustainable?
No, I think Steppen is a fantastic innovation. I think is creating what I like to call incentivized behavior market. I think it's going to be a massive market for crypto. like in line with metaverses. That being said, Steppen basically has massive unlocks. Everybody, like seed investors, are up 1,000%, and 1,000x. And I think that very high fully diluted valuation basically means that all this supply is going to start hitting the market. So you have one side supply hitting the market. On the other hand, you're going to have competitors everywhere, like Nike, get into the game. So I'm bullish on Steppen as a user for the next few months. I think Steppen is like where Helium was in like February 2021. As an investor, I would definitely not get in here.
$19 billion fully diluted, $20 billion fully diluted. I mean, I love Steppen. I'm an investor in Steppen, full disclosure, but $20 billion fully diluted. I don't know how much upside there is. That's the problem. And I'm very bullish on Steppen.
Yeah, me too. And on Ape and Yuga, I mean, I think what they're doing is wonderful. It's just basically, on one hand, it's wonderful. On the other hand, it's kind of natural for basically when you have all these speculative hot money inflows into an asset, that basically when the event takes place, sell the news. So it's not surprising at all that the market prices collapsed. I don't think it had much to do about ETH prices or gas or all the gas wars and all the issues that there were around there were a lot of issues around the mint and people were really upset. But I think it's mostly just about markets, in and out.
I mean, I made a video on Friday and I said, look, I think what's going to happen is that we're going to get a big pump because everybody's buying Ape to get the land. But I also said after the land sale, we're going to get a pullback. We did get the pullback. To me, the pullback is not enough of a pullback to be buying. Like I like the concept of ApeCoin and I'd love to get into ApeCoin, but I'm going to get it under $10. Otherwise, I'm not getting it at all. Yeah.
Yeah, well,
Alex,
I'm
listen.
small long here, but it's not, I agree with you. I think it's a little bit too premature, actually, based on price action.
What do you think of the land? What do you think of the land now trading at 3.6?
I mean, it's fascinating. It doesn't yet even exist, I think. It's incredible, all right?
Well, I mean, you can buy yourself let's have a look here. You can buy yourself a piece of land. What is it called? Ragged pig cake. Yeah, I mean, you can buy a ragged pig cake if you want.
Yeah, I don't have a view there. I think that requires somebody to basically dedicate a lot of time that I don't have for it. So there are people that basically are way better than that than me. So I don't think I'm going to make money buying that land short term. And long term, I think land is going to zero, actually. I mean, it's going to trend to zero, all the land. Going to like a very, very nice, very big pump and then massive dump.
Most of it will be zero.
Just how.
Last thing before I let you go, Alex. I mean, I thought this was going to be a 10-minute interview, but I'm loving this so much. Luna, are you a Luna fan? Are you a fan of UST algorithmically backed stablecoin?
It works. There's real demand. It's a Ponzi in a way, in a friendly way, but they can't sustain the Ponzi forever. They can just keep on replenishing the reserves, and the chart looks really good. I think actually Luna is going to go up, and basically all the haters, for good or bad reasons and good thesis, whatever, just a slight spark of bullishness in the market, and they're going to get absolutely overrun on Luna.
Okay, I'm going to ask you a question. So I'm just looking for a slide here. I don't have the slide here, but I bought a lot of Luna at the ICO. I held the Luna up until now. What started off as 1% of my portfolio is now 80% of my portfolio. So I have to take some money out of Luna and put it into other tokens. Okay, now here's the big thing. I don't want to invest it into very risky things because I don't want to alter the risk profile of my portfolio by a lot. So that's the premise is I want to trade out of Luna, but I don't want to alter the risk profile of my portfolio too much. So I'm going to go into very small, low coins, and I want to keep some upside. Where would you put money? I've taken some money and I've put some money into Solana. So I've done a switch between Luna and Solana. I've taken a very small chunk of money and I've put a little drop into NEAR. Where else would you put that money? I think Bitcoin and ETH are too safe. Where else would you put that money?
Well, I'm sorry to keep it boring here, but I would just do ETH, There is a very clear catalyst. It's going to be a very major catalyst. Basically, the coin is all at the same time going to turn into a high yield producing asset, deflationary asset, really deflationary asset. and basically ESG friendly. Like all these ESG crowds are very big and loud. They're gonna love it. And right now there's so much panic that there's almost nobody in the trade. The macro crowds are not yet there. So I think it's an easy. Sometimes things are just easy. That's what I feel, especially if you like, to put size on.
Yeah, amazing. Alex, thank you, buddy. It's been super insightful.
Thank you, Ron.
Welcome to Banter, guys. You can follow Alex on Twitter. His Twitter link is in the description below. Alex, thank you, buddy.
Thank you, Ron. Take care.
Come on. I mean, I've always wanted him on the show. He's got such interesting views. He's a great guy. You should follow him on Twitter. His Twitter is in the description here. You must follow him. You must follow him. Alrighty. Very quickly, tomorrow we are having a meetup here in Cape Town. So if you are in Cape Town, you go to meetups@cryptobanter.com. No, you don't go there. You email meetups@cryptobanter.com and you say, I want to come to the meetup tomorrow, and we'll put your name on the list. It is from 5 p.m. until 8 p.m. South African time, and at 8:30 we're going live for the Powell press interview. Also, if you hold Victoria VR, so this is important. Victoria VR is the Metaverse player, one of the Metaverse players that we are supporting him. They are looking for people to alpha test their VR. So if you've got, I think the number is 168 Victoria VR in your wallet, the addresses are getting whitelisted. They're going to take snapshots of the addresses, and then people are going to win the opportunity to actually test the VR. And I think they're also giving away Oculus. So just I'm not telling you to go and buy it. I'm saying if you have got, or if you're thinking of buying it, just know that that's what's happening out there at the moment. What else is there? Let's double some portfolios. I did want to speak to you about something else, but I think we'll speak about it tomorrow. Yeah, there is something I want to speak to you about. It's super important. We'll do it tomorrow. It'll be big, and I promise you I'll do it tomorrow. I think what we should do now is quickly just double some people's portfolio. So remember how this works. You go to ByBit. There's a referral link below. You have to do it with our referral link. You open an account. You deposit money into your account. We have a list of all the people. And what we're going to do here is we are going to double people's portfolio. So let's take row number 600 today. We are going to 10x row 600, but to 10 grand maximum 10 grand. Let's just put that there. And we're going to take these three and we're going to double them. So whatever they got in the account, we're going to double to a maximum of 10 grand. And the maximum amount that we can give away is 10 grand. All right, so let's go for it. It is row 601. Let's quickly unhide it. Let's quickly unhide the rows here. Row number 601 is the row that we're looking for. Let's hope there's people who got a lot of money in their account, so we can double their portfolio. And remember, we can double your portfolio too. So let's have a look here. Oh man, oh man, oh man. How do you have zero in your account if you know I'm doubling accounts? How do you have zero in your account?
Liquidated.
Oh man, zero. We double a 60, we double a 0, and we double another 0. What a pity, what a pity, what a pity. Alrighty, I'm gonna see you guys again tomorrow. Big show tomorrow. There's something I have to talk to you about. I was gonna do it today. Don't want to run the show too late. We're gonna do it tomorrow. So I'll see you guys again tomorrow. Until then, don't trade, just chill, have fun. It's a boring market. Don't look at it.